sure that I'm recording. Okay, I just want to make sure I'm doing recording. We wouldn't exist without our sponsors, the TD Bank Charitable Foundation, Provident Bank, Sun Trust, which is becoming Truist. I see Christina, I think, has joined us, and I think Jonathan will join us as well, Jonathan Justice, and CIA&J. Tony Russo has been a partner in this, and I think he'll be joining us a little later. Just for those of you who don't know us, we've been around 30 years. We've really built a number of student entrepreneurship programs over the years, one of which is our FDU, Fairleigh Dickinson University Pitch, where we take students who have entrepreneurial ideas and really give them a cash prize, and they get a chance to enter the U-Pitch for the state of New Jersey. It's a wonderful, wonderful program. Entrepreneurship is the future. So we're encouraging young people to really do that. We have a Family Business Alliance where we have wonderful educational programs similar like this, typically in person, and we do coaching. We have consulting and other things to really help family businesses at every stage of their development. We have our Family Business Awards. We've had them for 27 years. In October, we have our 28th, and we're still hoping that it will be in person. It's becoming less and less likely, unfortunately, because it seems like we're having more challenges. But that's where we honor family businesses under 10 million in self-reported revenues and over 10 million in self-reported revenues, to really recognize family businesses for the great things they do and identify the best in the state. We have a program called Veterans Launching Ventures. This is our 10th year doing it. We have a national program going on now with, I think, about 7 different states represented, where we help veterans and their family members develop a business plan over an 8-week program, and really help them get the business started and take it to the next level. And we have a small business series that the Mass Mutual Bellaria has been very instrumental in and supported, where we have outstanding speakers talk to small businesses. So we have our Family Business Week. And so in October, the 4th week of October, our website, familybusinessweek.com, we are encouraging everyone to identify and support a family business. Family businesses represent about 80% of the global economy, about 50% in the US, but it's important to really understand and celebrate them. We also developed a website for people to buy gift cards for, especially restaurants who are now struggling in this pandemic. I have a TV show called Family Business World, and George and Kate, we may want to get you on the show, where a 30-minute show. It's every Thursday at 10 a.m. and 8 p.m. where we talk to family businesses and people who work with family businesses to really provide some insight and guidance and really help people understand how important this segment of society is. Obviously, we have these Family Business Fridays, which we anticipate continuing throughout the year. And our Veterans Launching Ventures program, which we're so proud of, we're starting to accept a new class. If you know some veterans who really want to start a business. And then our Rothman Institute of Entrepreneurship channel on the YouTube, where we have this video, or we will have this video and others, to really talk about, to let people have access to it who may not have been able to make our programs. I have the honor of being on the Governor's New Jersey Restart and Recovery Advisory Council, where we're talking about the restart. We had weekly meetings, and now we're having monthly meetings to deal with this crisis. And so we thought we were out of the woods, and now, as many of you know, restaurants were supposed to open, they're not opening. And the reason I show this slide, as many have heard, is we talk about the 2009-2010 crisis, where there was $700,000 was the record weekly unemployment claims. And you look at where we are in 2020, and this is really an indication of how important small businesses are to employment in the United States. And so it's gotten a little better now, but you look at the peak of claims, up to 22.8, almost at the 24 of the Great Recession, of the Great Depression. And so it's important to really understand. And then we look statewide. On this show, we've had a number of guests. We had a guest from Georgia the last show, and to really see where we stand. And then finally, we want to really let people know the reason for this is that most businesses are under 100 employees, almost 70%. Almost 20% have 100 to 499, and then 10.4% have 500 or more employees. And that's why this is so important, family and small businesses. So with that, I want to talk a little bit about the reopening. As many of you heard, restaurants, as I said, were supposed to reopen. Many of them bought inventory, and then we're told you can't open for indoor dining. You can open for takeout and outdoor dining. And so that's still the case. And so you look at some of the things that are opening up, and they're subject to change depending on the levels of COVID-19 identification. So Kate and George, I want to kind of kick it off with, and then we'll get out of this. We'll have just a general discussion, and we'll take some questions. Please send questions either through the Q&A box or the chat box. But I really want to talk about, why don't you say a little bit about your background and how you got into financial planning?
Sure, thanks. So first of all, thank you everyone for joining today. So I grew up not far from Fairleigh Dickinson in Metuchen, New Jersey, and went to Brown University with Dale's brother. We ran on the track team together, and since then, always had a passion really for helping people. So got into financial services 30 years ago. And we're based out of the Metro Park office. The Reilly Financial Group has 10 financial advisors and 9 staff. My daughter Kate has been with us now. This is her 5th year in the business. Time is flying by. She's an Amherst grad and works a lot with our 20 and 30-year-old clients, but also works a lot with the children of our clients, which is, all about estate planning, succession planning, generational planning. Many of my clients in their 50s and 60s that have gray hair like me would rather work with someone like Kate regarding their insurance plans, regarding their investment plans. And so what's happened really over the last few months is people have really gone to their drawers in their homes and started to realize that they haven't updated this stuff in a while. So, very much looking forward to addressing this topic with you, Dale.
Wonderful, thank you. And Kate, a little bit about your background. You started young and got into this.
Sure. Hi, everyone. My name is Kate, and thank you so much for having us, Dale. It's an honor. So I interned with the Reilly Financial Group team all throughout college. And then as soon as I graduated, I joined the team. And I don't think anyone grows up as a little kid saying, I want to be a financial advisor when I grow up. But between my economics coursework and my love of numbers since I was a kid, and then my psychology major, financial services really was the perfect fit for me. Just like my father, I love helping people. And when it comes to the planning aspect, I love helping people figure out what their goals are and then help them achieve them. And particularly when you work with couples, sometimes we're their financial therapists because sometimes compromising and also helping people set goals and making sure that they're staying accountable to those goals.
Wonderful. Well, let's start with the kind of the obvious question. So we're in the midst of this pandemic, economic chaos. You're a family business. You consult to family businesses. People have had to dip into their savings. They've had to. What advice do you have if I'm a restaurant owner? We'll take restaurants because they're the hardest hit. And I saved a lot of money before. I've had to spend money. What advice? I'm sure you have a number of clients. What advice do either of you have for restaurant owners in particular?
Yeah, so one of my dear friends and then one of my very good clients own restaurants, and I can tell you they're struggling. So what we did initially is we became the quote unquote go-to advisors for the PPP loans and EIDL loans, which, as became very confusing. It changed, and it's become much more liberalized. So the first advice we gave them was absolutely, apply for the PPP loan. The second thing was obviously keeping a lot of cash on hand. But I will tell you, and it is frustrating, the best financial plan right now on the planet may not save some of these restaurants, Dale. And and it's very sad. But I can tell you the ones that are still around and still, quote unquote, paying their bills were the ones that got creative, right? It was the ones that said, hey, day one, drive by, we'll come to your car, we'll deliver you your food. Some of our clients that have gotten creative in the restaurant business give you a bottle of wine if you spend more than $100 in the restaurant. So those were some of the tips that we had given our restaurant clients. But sadly, through all of that, they're just it's all based on this horrible virus, and there are just going to be some restaurants that people aren't comfortable going to for a while, and again, I wish I had a better solution, but the ones that are still going, that's what we've done.
Well, one of the things that we're finding, and Kate, I'll go to you in a second, is that a lot of the smart restaurants, my daughter and I were at a pizzeria yesterday, and they said, well, we never closed. We basically always had takeout. We may have lost money, but people didn't forget us. And so I think one of the lessons is if you're out there and you've been closed, open up, even if you're,
Exactly.
even if it's you, so they know you're still around. Because I know how many restaurants I've gone by, say, oh, I didn't know you were open. So Kate, did you want to add something?
Yes, I was going to say that whether you're a restaurant owner or a small business owner or just any of our clients in general, one of the things that we've been helping people with, the one positive of timing of COVID is right now interest rates are low. So it is a good time to refinance either a mortgage. So if you're a business owner and you own the building that you work out of, good time to do refinance. And it's also a good time to refinance student loans, which can affect your overall cash flow if you're a business owner. So those two things are two positives that we've been able to help people out with. But like George said, it is unfortunate. Some people, there's just nothing you can do if people aren't able to come to your restaurant.
Right. Restaurant or
I think the higher end restaurants are the ones that have the most difficulty, right? The pizza pasta places, because like you said, Dale, we have one in town that we frequent probably twice a week. And a lot of their loyal customers have just kept going, and they just, you open up the hatch of your car, they give you your stuff, no one touches hands, you pay for it over the phone on your credit card. But it's harder for our clients that have the higher end restaurants because people want that experience. So you usually don't do takeout at a restaurant that's going to give you, filet and Chilean sea bass, right? You just don't do that. So that's been the struggle.
Well, and one of the things too that people don't think about with family businesses is that everybody in the family works in the business. So if the business is closed, that is a major financial strain. It's not like somebody's working for government and somebody's working for the business. And so I'm sure some of your clients, have you had any clients that have been dealing with that? Kind of the whole family is unemployed.
Yes, one in particular, and they're really struggling. Luckily, the PPP got them through, let's say, the last 8 to 10 weeks, but they're now running out, and for most restaurants, as you know, it's the rent, depending upon what town you're in. You could pay your employees, but if you can't pay the rent,
right,
and that continues. And some of the landlords have been working a lot. I also have a lot of commercial real estate clients, commercial real estate developers that have had to work with their, retail and office space businesses that are having a tough time paying the rent.
Yeah, it's really tough. So what kind of financial tools are available to people as they're looking to manage their money?
Yeah, so right now, we are a full length, properly diverse financial planning company. So when we do a holistic plan for a client, it's all about investments, cash, retirement planning, insurance, and estate planning, right? So one of the tools that we've been doing quite a bit of for people that have a little bit of a longer term horizon, as you know, we're in the midst of a very interesting stock market. The market dropped about 25% in the first quarter, right, and roared back. And people are concerned that it's roared back too quickly. So one of the tools we've been doing in our retirement planning are what we call downside protection or structured notes. So these are the types of investments where you could buy an index, and as an example, if the market goes down 20%, you get all your money back, and you're capped on the upside of, let's say, 100%, right? So if someone has money in an IRA right now and they've got time on their hands, there are 1-year notes, 3-year notes, 6-year notes, and they all have a downside buffer with an upside cap. You know, there's also something called buffered ETFs. Like there's one right now where you can buy the S&P, but if it goes up by more than 11% over the next year, you're capped at 11. But if it goes down by 20%, you get all your money back.
Interesting. Wow. Wow.
Yeah. So that's been so the people that are a little concerned, they're sitting on cash, they want to still get back into the market, but they're saying, my gosh, you know, the S&P went over 3,000 again. We think the leg's going to drop. You know, a lot of people are predicting a W, right? This was the first quarter, second quarter. Now we're going down to the W.
Right.
Everyone has a theory. So that's what we've been doing as far as the investment side.
And Kate, talk about, you're working a lot with clients of all ages, but in particular, some of the younger clients. What are some of the things you're seeing?
Yeah, so especially with our younger clients, but with all of our clients, we really focus on cash flow, and we like to build out the plan from there. So we always say we can't give advice on one thing in a vacuum, because we have no idea what they're bringing in on a monthly basis and what they're spending on a monthly basis. So until we know that, we can't really help them determine what would be the best investment for them, or what would be the best insurance product for them. So we utilize Personal Financial View, and the background software to that is eMoney, which is owned by Fidelity. And I love it. It's very similar to mint.com, where you can input all of a client's current accounts, whether they directly link their online login so they can see a live update, or sometimes people will just give us a rough estimate. They'll say, hey, I have about 5,000 in savings, input that into the system. And then once we input all the data, I like to work from the cash flow, because you can project it all the way out starting from now. So say I'm working with a 30-year-old couple, I can project out what's happening now, and they factor in required minimum distributions, they factor in inflation. So the software does a lot of the work for me, which is great. So I can focus on the relationship with the client, and it shows their income projected out until death. And we always joke, we can put in what age death is. So we always joke, well, if you work with our team, we guarantee you'll live to age 100. That's but so the cash flow tool is very helpful, so people can see, okay, here's how much I'm lagging. So maybe this is how much I need to start putting into my 401k, because I'm not either maximizing the match from my employer, or people realize, okay, I'm spending a little bit more than I should on a monthly basis based off of what my income is. And it helps people attribute accounts towards particular goals. So how you invest your retirement account as a 30-year-old is going to be very different to how you allocate the investment account that you have, that you're saving up to maybe put a down payment on a home in the next 2 to 5 years, as far as how aggressive or conservative you're going to be.
Excellent. Well, one of the things too. So when I'm consulting to businesses, I wrote a book called Intelligent Influence. It's about influence, and we're all products of our influence. So I'm particularly aware of influences. And I remember my grandmother, who was around during the Great Depression. You know, that generation, their view of the world, they saved everything. You know, they didn't. And so what do you think? And I'll ask both of you, from George, our generation, and Kate, your generation. What do you think are the influences as we look 10 years from now? Financial influences. How are people gonna look at money differently? What do you think people are going to learn from this period?
Yeah. So first of all, people have been extremely vulnerable.
Mm-hmm.
I can tell you, what's amazing is how resilient people are, particularly in the New York, New Jersey area. We're kind of like New York, New Jersey strong.
Right.
And we've been through many things together. I think back to 9/11, and now I think to this COVID-19. This is kind of the 20-something generation's 9/11, right? And So what has become very different for us, Dale, is that particularly in February, March, and April, people were starting to feel very vulnerable, not only about their money, because it was going down, but also about their health and about their mortality, right? This was unlike any other market correction, because usually there's an economic devastation, but not a health devastation.
Top of it.
We happen to have both, in the last 6 months. So what's happened to a lot of our, clients, young and old, is they become a lot more vulnerable. So they started asking us about, estate planning, as far as making sure that their wills were laid out properly. Some people went into their drawer in the last, 3 months, because everybody's home, and they realized we haven't updated our will in a very long time. Number one. Number two, I've asked our clients, have you done a beneficiary audit on all of your life insurance, IRAs, et cetera? And they have no idea what this is. And most people might have a primary beneficiary, but they might not have updated in a while. Maybe their kids are adults now and they want to add their kids as contingent beneficiaries, or in certain situations, primary beneficiaries. So I would say the way they're thinking about money is they're a little bit more conservative. So what I think the financial services world has given birth to over the last, 3 or 4 months are these investments with protection, right? There are these buffered ETFs. A lot of people want to put their money in fixed, 3-year fixed CDs. They want to put their money in bonds. And sadly, what we have to do is explain to them that unless they're 65 or 70, that's not an appropriate thing to do. So we almost have to be, the bad cop when we meet with our clients to say, listen, I know that you're vulnerable. I know your account balance has dropped significantly, but we got to hang in there with this plan. So I think the more creative financial planners out there that are talking about risk, talking about vulnerability, talking about mortality with their clients, and let's face it, no one wants to talk about that. But you got to have the hard conversations so that 10 years from now, if they stayed conservative for the next 10 years and averaged 2% or 3% instead of 7 or 8, that's the difference between doubling your money in 10 years and maybe it only going up by 30 or 40%.
That's a great point. I used to be a certified financial planner before I went to the MBA program. And I remember one of the tricks people said, I didn't have any money to put away. And I created this little sheet, just said, every time you spend money, whether you buy coffee, this was even before Starbucks, it's something, it's amazing. They come up with $1,000 that they spend on stuff to put away, especially with young people, especially when you're in your 20s and 30s, that stuff adds up. So Kate, let me ask you this thing, but what do you think is going to be the impact? As I said, I have a 15-year-old daughter, Ashley, and what do you think the impact on young people will be given this pandemic?
Yeah, I think it's going to be very similar to people in their 20s and 30s now. Either were in high school and watched their parents struggle during 08, 09, or they're maybe in their mid to late 30s or early 30s, they were trying to enter the workforce in 08, 09. So I think for the kids currently in high school and college now, it's going to be like that for them, where it's going to make them a little bit more conservative when it comes to investing, and make them more willing to save more, I think, on a monthly basis. But it make them, I find myself having to be the financial coach to people in their 20s and 30s when it comes to a long-term investment, and reminding them, you can be aggressive with this because you have plenty of time and things seem really scary now. I also think the feeling of invincibility that usually goes along with younger folks has definitely gone away a bit. And I think people in their 20s and 30s are thinking, okay, I should probably have things in order in case something happens to me. So maybe it's a good time to sit down and maybe do a teleconference with a lawyer and put a basic will in place and make sure I have the proper healthcare proxy, because maybe they know someone, a neighbor or someone who's gotten COVID, and it's a big shock to the system as far as feeling invincible in your 20s and 30s, and making sure that they have the right amount of life insurance in place, because as morbid and scary as that is to talk about, it's on the forefront of people's minds these days.
Well, I'm hearing, a lot of there's been a backlash of young people, that a number of people are having parties. I've even heard of these COVID parties where the first person to get sick actually gets some money. And I think young people are realizing this is no joke. This illness is no joke, and they're starting to realize that there's some mortality that hopefully will lead people to think about that. And so, estate planning, and George, we were talking before the show began about this idea of estate planning, that's something the Vanderbilt should be doing, not as average people. Talk about estate planning. What should average people do?
Yeah, great question. So it's important when you hear estate planning that you differentiate between estate tax planning and estate planning. So estate tax planning is for someone who has significant wealth and they're trying to pass on their wealth to the next generation without giving up that much to the government. We always say, don't make Uncle Sam your primary beneficiary, right? So that's estate tax planning. And there are some people perhaps on the call, or you're part of a business where you might be above that threshold. Right now in the United States, if you have an estate over $11 million and you're single, everything above that is subject to estate tax. If you're married and it's over 22 million, right? So you may own a business or a commercial real estate portfolio or inherited significant wealth. And so with estate tax planning, there's a bunch of different, exercises we do with estate planning attorneys to minimize the tax to the next generation. One is gifting. Number two is setting up some charitable trusts or setting up like a donor advisor fund. And then the last is, using life insurance owned by a trust to pay the estate tax, right? Because most people who are insurable would rather just, pay the money in premiums, which is a fraction of what the estate tax would be to your kids, so that when the two of you, or if one of you is gone and your estate gets passed on, there's enough life insurance there to pay the tax. So that's estate tax planning. That's a very, very rough, back of the napkin. Estate planning, though, is a myriad of challenges. So the first is a will. So when you set up a will, you are doing estate planning, but you should really update your will every 5 to 10 years. So those of you on this call who did a will, you say, oh yeah, I did a will. How long ago? When we got married. How long have you been married? 30 years. So, and I have been married, for 30 years. So you have to update your will because tax laws change and guardianship of your children might change. Your children might become adults. And Kate, I want you to talk about maybe the healthcare proxy in a minute when your kids get 18. But to update your will is extremely important. And you want to make sure also that you have these healthcare proxies, or you also want to have what's called a living will, because, God forbid you become incapacitated or disabled and you want someone in your family, a loved one or a spouse, to act on your behalf. And if you don't have that, I can tell you the courts will make it very difficult to access your money. So that's a big one. And then just making sure you're checking your beneficiaries. If you do one thing after listening to us today, look at anything that has a named beneficiary, including life insurance, IRAs, trusts. Make sure you have the beneficiary and the contingent beneficiary updated. And then lastly, if you have a bank account, or let's say you work, with your parents. My mom and dad passed away in the last couple of years. And what they did was set up what's called POD accounts. So that's another form of estate planning. So, if you deal with your parents and they're in their 70s or 80s and maybe close to mortality, and they have money in the bank or even money in an investment account, you can actually, even if it's an after-tax account and not an IRA, it can have a named beneficiary. It's called a POD account. Pay on death is what POD stands for. So when my mom passed away, it made life very easy because she had a brokerage account, and I'm one of 6 kids. So myself and my 5 siblings, we didn't have to probate my mom's will to get the brokerage account. It went directly to us because it was POD. So we've been getting a ton of questions on this because people are home and they've been going through their drawers and, as we said, doing a lot of these projects, spring cleaning, renovating your home. And I think this has been great. But if you have children that are going off to college, or let's say, Dale, you have a 15-year-old, so this is going to really apply to you. So Kate, talk about what mom and dad did when you and your sisters turned 18.
Yeah, so there's some little tricks to estate planning that it's just don't know, then you don't know. So for a healthcare proxy, if you have children who are going off to college, who are, once they turn 18, they are technically an adult. And therefore, if they were to get injured at college and are in a hospital, technically, if you were to call into the hospital, they can't disclose any health information to you. So you want to make sure that you, on your children's 18th birthday, give them the birthday cake and the present. You also say, also sign this paper, because you don't want to think about it, but if something were to happen to your kid, and even if the college is close by, but especially if they're going to school far away, you want to know that you can be able to call into the hospital and that they'll call you before they make any medical decisions, because you don't want your kid's sophomore roommate to be the one that they're consulting about what to do.
That's great, great advice. I had an experience. I'm vice president of the Brunswick Board of Education. We had an in-person graduation on Wednesday. And so I had a chance to speak, and I was just tearing up just thinking about my daughter graduating, in 2 years, and I'm going to be president in 2 years. So I'm going to have to keep it together. So, but these are things you got to think about as you worried about them leaving the house and so on. And so, so as we think about these estate plans, my parents have moved in. My dad's 86, my mom's 85. But they had a will done years and years ago. Where do you go to get a new will done? I mean, what guidance would you give to people that are thinking about getting their will?
Yeah, great question. So you want to go to a good estate planning attorney. And if you don't know of one, ask your financial advisor or your CPA, whoever does your taxes or whoever does your financial planning. Anyone on this call, if you want to email us or email us through Dale, we'll happily, we have a whole slew of attorneys that do this for us, that we trust. And that's the big thing. It becomes a word of mouth thing too, Dale. Like you ask your siblings or ask your friends, say, have you done your will in a while? Yeah, I have a great person, and et cetera. So that's number one. But number two, regarding aging parents, there's a very much more specific type of attorney. It's called an elder care attorney, right? So if your parents are moving in with you and they're in their 80s and maybe their health is starting to fade a bit, and you want to protect their assets, as you know, once you go into a nursing home, a lot of the assets, my maternal and my paternal grandparents all spend time in a nursing home and all spent significant money in the nursing home. So my wife and I bought long-term care insurance, early on. So the way to prevent that is having long-term care insurance. But if it's too late and your parents don't have it, the other suggestion that I would say is meet with a good elder law attorney along with your financial planner to figure out maybe a gifting strategy to start reducing your parents' assets. Now that could be a tough conversation because mom and dad a lot of times will say, hey, what are you trying to do? I worked hard for this money. You'll get it when I'm gone, but it could be awkward. But a lot of times, if you have a good buffer in the middle, a good attorney or a good financial planner will allow a conversation to be had with your parents to say, listen, you have X amount in CDs at the bank. You're never going to use this money. Why let it go to a nursing home? Now you have to be careful because there are definite rules around this, and there are legal rules with gifting and trust planning, but I've had many good attorneys be able to help clients of ours have peace of mind knowing that their money that they worked hard for is going to go to their kids, not the nursing home.
Yeah. That's a great point. Kate, you say something?
Yeah, also a lot of people are unaware that their employer provides them with a service like Hyatt Legal. So a lot of companies, if you work for a larger company, So if you're a family business owner, perhaps your spouse or someone else in your family has access to Hyatt Legal, and there's a few other programs where if you pay a very small monthly fee, you and your parents have access to any lawyers on their team, where you just do a simple will, set up a trust, anything that you would need to do. So people are often unaware of that.
That's great. One of the other things too, and I always, especially being at a university, we kind of think globally about some of these issues. And with the pandemic, with the danger to senior citizens, with property taxes, even before this, I was really saying that the new model may be what was the old model, was really having multi-generations living in your house. And so fortunately, my house is big enough. My parents have a great place downstairs. My daughter's upstairs. I'm here doing this. And I save a lot. I mean, the property taxes are reasonable when you have them. And so they rented out their place. They have a place in Asbury Park. And so there's the whole new financial world. I see things changing. But this whole idea of estate planning, because you don't want to think about them not being with you, but you've got to. And so now what about from a business standpoint? It's tough enough when you're just dealing with your parents. What do you do with partners, with buy-sell agreements? There's all sorts of chaos that this whole pandemic has put into business relationships. What advice do you have as people are kind of reevaluating partnerships and et cetera, et cetera?
Absolutely, yeah. So the first thing you want to do is, sit down with, again, most of the time it's your accountant and your financial advisor, and come up with now a current valuation of your business, which can be difficult, right? But you also want to have the conversation of, the very difficult conversation of what happens if something were to happen to me. So we have a perfect situation because I have 3 partners, and Kate happens to be my daughter, is not my partner yet, right? So my 3 partners have been with me a long time. One has been with me 20 years. So our goal is that Kate will eventually, if she earns it, becomes a partner. But once she does, the idea is if I were to pass away, then clearly because Kate's my daughter, a certain portion of the shares of my shares are going to go to Kate, right? So she'll just step in. But we did this in the form of a buy-sell agreement. And again, a good estate planning attorney will do it's called either a stock purchase plan or a cross-purchase agreement. And we can do a whole seminar on that. But it's basically, what happens after I pass away. But the other big one, Dale, is what if I get disabled, and I can't work again? So there's plans for that. There's insurance for that. So we put together a whole plan within our organization. And so we were, quote unquote, the guinea pig. So when I talk to other small businesses, I can speak with conviction because I tell them this is not only what I recommend, this is what I did for my business and my partners. And then the generational planning, the succession planning is, all right, what happens in 10 years when my hair is even more gray and I want to retire? Who's going to take over this business? And right now we have a younger partner, Costas, and Kate. We imagine 10 years from now, they're going to be taking over the business. And, we're going to just basically bow out gracefully. So those are conversations you have to have. I will say too, though, when you have them, it really makes the younger generation who work on your team or work for you within the business, if they think they have an opportunity of ownership one day, it's amazing what happens to their morale, right? If you have a conversation with someone, listen, I like your work ethic, even though you're 32, I think that one day when I retire, I want to give you an opportunity to, either buy me out or you and 3 other people buy me out. So I think these, even though they're tough conversations, I think it gets people excited when you talk about it.
We have another question from the audience. Delia, I see a return of state, federal estate tax and other state taxes increasing again due to the pandemic. Are you seeing an interest in the forward view of family estate planning, which is, kind of looking forward?
Yeah, so, what we're going through right now with our clients is, we call it wait and see estate planning.
Mhm.
So we always have to plan what current laws are. Having said that, though, living in New Jersey, if you remember, it was only a couple of years ago that if you had assets over $675,000, which includes any life insurance that you own, by the way, if it's not owned by a trust, your life insurance is part of your estate. So in New Jersey, if you passed it down to anyone but a spouse, they were going to pay New Jersey estate tax. Well, they reduced the New Jersey estate tax to 0. And that's very important language. They didn't say it's eliminated. They just reduced it to 0%. So the person who asked the question, you're absolutely right. They can reserve the right to increase that back to 10, 11. It was as high as 15% for people with significant wealth. So there were people walking around New Jersey when the federal estate tax went up to estate tax threshold went up to about $11 million. There are people walking around New Jersey saying, well, I'm worth $5 million. I don't have a problem. And the answer is you do, because anything above 675 2 years ago, you had a New Jersey estate tax issue. Mm-hmm. So as we speak today, Dale, there isn't a big issue, but the federal estate tax is due to sunset at the end of 2025. So 5 years from now, it used to be $5 million. There's talk that it's going to go back to $5 million. And then, of course, the political softball is, it depends on who wins the White House in November, will certainly determine how estate taxes change. But I'm glad that question was asked, because just because it's current law doesn't mean it's going to stay that way. Right. In my 30-year career as a financial advisor, I will bet there's been probably six changes, or even 7, to the estate taxes. So that's an average of every 3 or 4 years they change.
Wow. Kate, so if you're talking to really anyone, I remember we used to talk about dollar cost averaging for young people. Is that still something that we should have our family members doing, or with mutual funds?
Yes. Yeah, absolutely. So dollar cost averaging is something that happens automatically when you're doing a 401k, because you're adding in every paycheck. But particularly family businesses, where it's usually smaller and they're maybe either doing their own IRA on their own, or they might be doing, they might have set up a simple IRA, or if they're self-employed, it would be a SEP IRA. So for that, particularly right now, right after the market went way down, people were very excited to get in the market and buy the dip, as you hear in the media. But what we explain is, a lot of times it's a better idea to spread out that money over the course of a period of time, so that you're sort of diversifying when you're getting in. And so whether that's setting up something where you have an account where it's out of sight, out of mind, coming out of your checking account, a certain amount monthly to save slowly but surely. Or if it's what we've done a lot is, a lot of our clients, right after the large drop in the first quarter, they wanted to get into the market at that point. They wanted to give us a large lump sum, but they didn't want it all to go in on the same day. So they would write us a check for a certain sum, and then we would every week go in and only trade a little bit at a time. So that's one way that we can dollar cost average as well.
Okay, excellent. And George, you had mentioned, I was going to follow up with the buy-sell agreement. You talked about that. Say a little more about it, because I've learned a lot of our clients really don't know what that is and really don't understand it. So in basic terms, what is a buy-sell agreement?
Yeah. So let me give you an example of a 2-person group. Let's say, Dale, you and I owned a business together, and the business was worth $1 million. And as much as I get along great with your wife, and as much as you might get along great with my wife, we may not want to have them as a business partner if something were to happen to either of us. So what the buy-sell agreement does, it's a legal contract that forces your wife to sell her shares to me, or my wife to sell her shares to you, because obviously in our will, as much as I love you as my business partner, I'm not going to leave my portion of the business to you. I'm going to leave it to my wife. So the way it gets solved is through buying life insurance. So I would own a $500,000 policy on your life, and I'm the beneficiary. You would own a $500,000 policy on my life, and you're the beneficiary. And then the four of us, you and me and our spouses, would sign an agreement saying, you know, if it's next year, God forbid, or 10 years from now, whatever the case may be, we agree, our surviving spouses agree to sell the shares so that you now, Dale, are 100% owner of the business and you can run it the way you want. But my wife gets the dollar amount of the business and she can just take the $500,000 and do whatever she wants with it. Most spouses don't, you know, want to get into the business. And we've seen many situations where, you know, the business owner passes away and then the spouse comes in because there was no agreement. There was really no insurance in place. So now the partners are forced to work with the husband or the wife of whoever the spouse was that passed away. And it becomes very sticky.
Great. That's a great explanation. And it really isn't that hard to do. And yet people don't do it. And then they run into problems. It's amazing to me. And that's why that explanation is really, really good. I mean, that's really valuable. Whether you have a business or you're starting a business, you really want to think that through. The other thing is, and I always think about, obviously tennis is my thing, is that Wimbledon had been paying this paying this policy that accounted for this pandemic. So they didn't have Wimbledon this year, but they didn't lose any money. Mm. Whereas the U.S. Open and most other players, they paid $1 million a year. They paid a lot of money over years to do that. And so this whole force de majeure clause in insurance and other things that people are dealing with. I imagine that insurance may change over time or something. Any thoughts about that? Or what should you look at when you're doing an insurance policy? What guidance do you have?
Yeah, so it's a great question. We use an expression, Noah built the ark on a sunny day. Right, so that's the definition of insurance, right? If you think that through in your head. But the difficult part, and I think where we have to be creative as financial advisors, literally, if a business owner bought every piece of insurance that made sense to do, it would probably take up so much of their overhead that they may go out of business, right? So we almost have to prioritize. So, you know, obviously with buy-sell agreement, if you buy inexpensive term life insurance, it's not that expensive to protect your business from death. It's a little bit more expensive to protect it from disability, right? So it all depends on how well and how profitable the business is. Obviously, the more profitable the business is, the more they can dedicate premiums towards these types of things. But the other one is business interruption insurance, which is technically what Wimbledon had. Right. The other one, which I have for our team, is business overhead insurance, right? So that would be for the situation where, let's say I'm disabled and I'm out for a year and a half, and then I can come back to work. There's business overhead insurance where you're still paying your staff, because our staff still needs to function in order for the Reilly Financial Group to continue. So there's business overhead insurance. But to me, the art of financial planning with business owners is picking the priorities, you know, to say, listen, here are the 6 or 7 things that are important that all of our clients do. Let's focus on the first 2. And then, you know, we'll go to number 3, maybe in 6 months or a year. We always say we want to create progress, not perfection, right? If we've made progress together over the next 6 months, you know, we're not going to fit all the pieces in the puzzle. But I think, you know, always insurance has a big factor. And, you know, everybody, when your house is on fire, everybody wants the best homeowners insurance, right? It's very sad, right? When you're diagnosed with a terminal illness, you know, God forbid, everybody wants $5 million of life insurance. So that's why I say you got to do it while you're healthy. while the sun is shining. And that's how you qualify.
And
Unfortunately, Kate, you want to go ahead?
very quick, I was just going to say, like any other industry, the insurance industry has adapted as well. So they hear the complaints of the people, if you will. So for example, one big one that's pretty recent is long-term care insurance. People's biggest complaint is it's really expensive. They can raise rates after you've had the policy for a couple of years. And what if I'm really healthy and then pass away peacefully in my sleep at home at age 100 and I've never used it? So they've heard that loud and clear, and they now have policies where they combine long-term care and life insurance together in one policy. So if you never need the long-term care, all of that extra money that you've been paying into goes towards the death benefit for your beneficiaries.
Great. That's you both have such great information. Fortunately, things are changing, with equality for women, and so. But the story of my aunt, my late aunt, she and her husband owned actually one of the most successful Shell stations in the country out on the West Coast and near Pebble Beach. My uncle passed away, and this is a few years ago, and it was a time when the husband took care of everything, and then he passed away, and they didn't do any preparation, and Shell tried to basically steal the business from her. That these were your husband's papers, these weren't your papers, and that. How do we, and that sexism still exists today, and women and men, sometimes, and sometimes it's the other way around, where a lot of men said, I don't want to deal with the books, my wife will take care of it, and then she unfortunately passes away. So Kate, is a young woman, and what advice do you have for couples, men and women, to protect themselves going forward financially?
Yeah, absolutely. And that is so upsetting to hear. So I think
She ended up suing him and winning a lot of money. So she ended up pretty
good. Down with Shell. Yeah. So I think what's really important is establishing joint accounts, I think, is really important. But then also making sure that as a financial advisor or financial planner, that you are speaking to both spouses. And if it's a family business, you're speaking to the whole family. Whereas a lot of financial advisors in the past would speak to just the breadwinner or just the one spouse, then you're missing out on half of the conversation. And then from the couple's point of view, make sure you're both sitting down at the table with the advisor so that both opinions are heard. Establishing joint accounts is really important. And then I think putting things in writing and having things officially documented is really crucial, whether it's as elaborate as a buy-sell agreement or as simple as a promissory note between an aunt and her niece. Like, you want to make sure you have everything in writing so that you can always back things up with a legal document.
That's really important. And sometimes it's uncomfortable. This isn't, a lot of this,
right.
A lot of everything we're talking about is uncomfortable. Talking about people passing away, talking about estates, talking about in the event of problems. But what we're learning today is that you can't avoid it. You really have to do risk management in every aspect of your life. And unfortunately, one of us and my team knows I'm an entrepreneur. I love thinking about the future, about trying new things. So I take risks. But sometimes you really have to, even those of us that are entrepreneurs and risk takers, have to step back and say, in the event that something bad happens, we have to have at least the basic coverage. And so how have you over the years worked with those entrepreneurs who are, kind of just looking forward and refuse to kind of really look back? Either of you.
Yeah, it's a struggle.
Mm-hmm.
It's like herding cats sometimes. Because what makes entrepreneurs so special is they can think quickly. Most of them have a very short attention span. Most want to just get it done, get in a car, get to the meeting, get on a plane, whatever the case is. And so to get them to sit down is usually half the battle. So what we do is we'll plan it out in advance. And I think you can get a busy person to focus on something if you plan it out 3 or 4 weeks in advance. I think the mistake sometimes accountants, attorneys, financial advisors try to do is say, well, what's your schedule look like for next week, right? So the art of getting people together is having a wonderful office manager on your team that's working with the office manager on their team, right? So we have a woman in our office, Britt Bryson. She is fantastic. I mean, she basically runs our business. And Britt knows who to call, how long to take to schedule the meeting, who to talk to about scheduling the meeting. So there really is an art to it. And a lot of business owners have a gatekeeper. And Britt is our gatekeeper, of course, because we get a lot of solicitations as well. And so she's got to be the gatekeeper. But I think one of the main ways of having this happen is you get the gatekeeper to sit down or to talk to their gatekeeper, focusing on, hey, this is a very important meeting. What does Jane's schedule look like, or what does Jim's schedule look like, 3 or 4 weeks from now? And do it at a time, maybe like a Friday afternoon at 4, when everyone's kind of relaxed. Obviously you don't schedule it Monday at 10 a.m. No one does that. But I think if you schedule it a few weeks out and you do it in the afternoon, and look, if it's a good enough client, sometimes you might have to meet them on a Saturday. We've done that. We try not to do that because I try to focus weekends on the family, but you take what your clients can give you sometimes, and sometimes that's the only way to pin them down. But the key, Dale, is put it on one page. I'm a big believer in the one page. So when we have that meeting, I love the one-page business plan. I love the one-page financial plan. And, we'll give you the book with all the particulars, but here's the summary. Business owners, wealthy people, they want a summary. And so that's what we do. And then we say, look, we're going to focus on these 4 things and who's assigned to it. And if you have them delegate for you, life becomes easy, right? Because there might be 4 things they have to do, and they say, all right, you're going to give this one to Jim, this one's going to go to John, I'll take this one, and that one's going to go to Mary. Well, now we don't have to deal with the busy, business owner on 3 of the 4 things. We can do it through their staff, through their spouse, through their, right? So I think set the expectation is such a big, overly used expression, but if you set the expectation of how important is this, and by the way, if it's not important to them, then they're never going to do it. So we always say you have to explode dynamite in every meeting. You have to make it a priority for them. You almost have to walk them through, here's what happened to another client of mine who didn't do this. Right. So I always try to tell stories, and they're all true stories. Here's clients of mine that did this, and here's clients of mine that didn't do this, and here's what happened. So you want them at least hopefully saying, holy moly, I need to focus on this. I need to address this. Because if you go there and they're all nice and willy-nilly and say, well, whenever you'd like, we'll come back, No, business owners want to be grabbed by the arm and say, listen, you need to do this, and here's why. And I'm not doing this to be a pain. I'm not trying to close you or any of that crap. It's all about getting them to focus on it. And the process, usually works when they're focused.
Well, this is great. I mean, this hour always goes by so quickly. The message I'm hearing from you is, one, risk management is really key. It's clear that this pandemic has made everybody aware that we don't know the future. We can't guarantee anything. And even those entrepreneurs that think, everything's going to be rosy are being aware, are awake now. And so I'm hoping that people have gotten from this some real insights into financial planning, into financial management, estate planning, and risk management. So thank you. Any final word or anything?
Just thank you, everyone, for joining today, and absolutely address these issues with your financial planner or your estate planning attorney. And if you don't have anything that we discussed today and you need resources for that, send Dale an email and they'll get in touch with us. But it was a pleasure spending time with you, and I hope most importantly you and your families are staying safe through this pandemic, and God bless.
What's the website if they want to get information? What's your website?
So it's ReillyFinancialGroup.com. So over our shoulders here, it's REILLY. financialgroup.com. And my email address is george@reillyfinancialgroup.com. So,
And I'm Kate at reillyfinancialgroup.com. So nice and easy.
Excellent. Well, thank you very much. Thank everybody for listening in. We will be here next week, same time, on next Friday. So take care. Have a wonderful weekend. And thank you all. George and Kate, you're wonderful as always. So take care. Have a good one.
thanks, Dale.
Thanks, Dale. Have a good one.
Take care now.